So, what do I invest in? I have a 5 million savings somewhere. Should I put it in shares? Should I buy a piece of land and build rentals? Should I buy bills or bonds? What do you think? Which MMF is the best in the market? And is cryptocurrency safe? How do they even operate? Na hii serikali ya Ruto, do you think they'll pay these bonds on maturity? So many questions about investment. So, which is the best type of investment, and how do you pick out an investment that is suitable for you? This is Angie on Bonds. If you haven't subscribed to my YouTube channel, kindly do so, and let's walk this journey of investment together. So which are the things you need to consider before making any investment? The main one you need to know about is, what are your financial objectives? Remember, we all have different financial objectives. We are in different stages of life. We have different obligations. We have different jobs and businesses. Our lifestyles are different. So our financial objectives are quite different and unique to every individual. So which one is yours? Have you identified it? There are three main things that you need to consider when making an investment: the risk, the return, and the liquidity. The three main things you have to consider. And I'll list down just a few of the investment options we have available. We have treasury bonds and treasury bills. We have real estate. We have MMFs, or mutual funds, money market funds, mutual funds. We have the stocks market. We have cryptocurrency. We have forex. We have insurance, which is not really an investment. It just has a small aspect of investment. We have the SACCOs again, which are not really investments, but they have a small aspect of investment. We have fixed deposits as well offered by the bank. So which one suits your needs? To determine these, you need to find out what's the risk and the return and the liquidity in each one of them, and then you can decide what it is that suits your needs. Also, please note that you need to identify the trading aspect of any investment and the passive income on any investment. For example, real estate. The trading aspect is when you buy land and sell and buy and sell. That is trading, and you might need to know how to have very good knowledge on that. Shares, the same thing. Buying and selling of shares when you make good margins, that's the trading bit of it. But when it comes to waiting for a dividend from a share, now that's the passive investment bit of it. And you need to differentiate the two so that you decide whether you're buying land and selling or you're building rentals to get the passive income. We confuse a lot and we don't know, we just mix them. We don't know what's the trading bit and what's the passive income bit of it. And what can help you differentiate what exactly you're investing in, what it entails, is finding out what's the risk and what's the return in it. And I'll go through them. So the risk. We all know that risk, whenever risk is high, the return is also high. So if your main goal is having a high return investment, then you should know that your risk also goes high. These will come in very handy for younger people, whereby you're able to run your business, you have a good salary, you're growing, and you can take up risk. And the older you grow, then maybe you need to minimize on your risk and work on your liquidity bit of it. For example, the risk in bonds is quite low. In fact, it's usually rated as one of the lowest in terms of the investments that we have. When it comes to something like shares, in terms of the trading bit of it, then the risk goes up high. The return is high, but the risk is also high. When you're buying shares to get a dividend, then that's the passive investment bit of it, where you don't have to do anything. You just buy shares and wait for the dividend to come. And that makes it less risky, but also the return is also lower. When you come to real estate, the risk is considerably low, but also the return is also considerably low. When it comes to some things like forex and cryptocurrencies where people are just trading, then you will know that the risk is quite high. So to determine the risk, you need to know who has your money and what they're doing with your money. If you can't point out who has your money and what they're doing with it, then your risk goes up. And some of the investments that are a bit risky, it's shares on the trading beat, cryptocurrency, forex and such, whereby you're not in full control. Maybe you don't even know the company you're investing in. On the low risk investments, then you have the treasury bonds, then you have the bills, then we have something like real estate. Those are some of the things that are low on risk. So if you're not on to taking much of a risk, then you'd consider such. The return aspect. How much are you earning from your investment? Most of the time, we don't really know how much you're earning. All you know is that you're getting some money back from your investment. Maybe you put in some money and there's some money being sent every month, but if you're asked to calculate what's the percentage, remember you need to compare your investments, your returns on a percentage basis per annum. That way you can tell which is a better investment than the other. So compute how much return you're getting on any investment and compare with other things and see which one has a better one. Remember, it's computed per annum. Also find out if your return is fixed or it's fluctuating. For example, in bills and bonds, the return is usually fixed. On something like MMF and on the shares where you're getting a dividend, the return keeps fluctuating. So that gives it an element of risk because you don't know, it depends on how the economy keeps working. But on bonds, once you're told a certain coupon, once it's announced, then that is what you'll make from that bond for the rest of its entire life. So again, like I mentioned earlier, the investments that have higher risk also have higher return. Something like bond has a relatively low return, and bills as well. And we're talking of like now the highest you're getting on any bond in terms of coupon is an IFB that has a 15.837%. That's the highest in the market. But if you could go to something like trading of shares or trading of land, then you could get better return from them. When it comes to real estate, the passive investment bit of it on rentals, where you buy and build and wait for to collect rent, then the income, the return goes low, because the risk on that as well comes low. So you get something from 5% to 9% per annum, just there about on rentals. When you go to something like MMF or the mutual funds, where you're giving someone to manage your funds and they give you, let's say, a fixed income, then they give you at around 10% give or take. So these are just the average that you have in the market. So you need to know how much return you're getting, and if your objective is getting a very high return, then know which investment to put your money into. And so the other last thing that you need to consider is liquidity. That means how fast can you convert your investment into cash? How fast can you get your cash back from your investment? Some of the things like bonds, I keep saying it's not easy to sell a bond, so it's not liquid. It will be hard to get cash. Just in case you are in an emergency situation, then it will be hard to sell a bond to get your cash back. Something like MMFs, that's easier to convert into cash. Something like shares, you could sell the shares, but again at a risk, because like now the levels are quite low, so you might suffer a loss. So we wouldn't say they're that liquid. Fixed deposits, they're liquid. You can break that deposit with the bank. The only thing you lose is the return for that duration. Real estate, not liquid. It will be very hard to just sell a piece of land or rentals. So it will be hard to get your cash back in case you need some good amount of cash. So yes, you need to figure out if you need liquidity, if you might need some cash before the maturity of your investment, then you need to find out if the investment is liquid or not liquid. So those are some of the things you need to consider before investing. Don't just invest in something just because your friend, your relatives are investing in them. Have some considerations, and some of the factors that you need to check is your age, your family setup, your risk appetite, and your occupation. That will guide you better on exactly what kind of investment you need to put up. Remember that diversification is key. Do not put all your eggs in one basket. And if you need me to guide you through that, then you can send me an email on the details given or on the number that is given on your screen, and I'll be there to assist you. Remember, if your money is not making you money, then it's losing you some money. Thank you.